You found affordable day trading. I'm Don Singletary. Welcome to the channel. After today's featured trade, I'm going to show you this graphic. I'm going to show you how to simplify your trade selection process, and that in turn is going to help you protect your account balance. This micro of the NASDAQ100 trades at only $2 a point. That's 1/10 of the regular size, so lower cost to trade it, and it's less risky. I always use the same but effective trade setup screen here. The top half, 5-minute candlesticks, and the bottom half, the trade signal indicator called the MACD, some call it the MACD. This featured trade is August 1st. That's a Monday. I'm going to start trading at 1:35 p.m. But first, let's take a look at the entire day since the day session opened and see what's happening in the market. As you see in the red circle there, the market in the first hour was pretty up and down. A lot of earnings reports, and the Feds are having meetings on interest rates during this week. But look what happened from 11 o'clock all the way to 1:30. Prices are almost absolutely level. And of course, down in the bottom pane in the orange rectangle, you see the MACD is basically telling us the same thing, as it should. And you see the red and green lines are weaving in and out of each other during that entire time, 2.5 hours. And it's important to note the red and green lines are barely above the zero line. And they are moving neither up or down, which suggests a stalled momentum. Let me say it a different way. I see what is not happening. There are 30 candlesticks in that top half of the screen there from 11 a.m. to 1:30. That's 30 candlesticks, 30 opportunities the market had to go above that price resistance, and it did not do it. Look at the arrows. The price is the same at 1:30 as it was at 11 a.m., 2.5 hours earlier. What my eyes are seeing here is an unused opportunity. You don't have to be a stellar mathematician to get the logic here. 30 times prices couldn't go up, so I'm going to short a contract right now. Now, of course, there's no guarantee I'm going to be right, but at least it looks like I might not be wrong. We're all set. Stand by. The live trade coming up next. Over 25,000 people have used my book here on the Micro Eminis to help them get a fast and easy start. It really helps a lot to have the information that you need in front of you, and it's important if you want to speed up your learning to know which things are important and which things are maybe not so important. It makes learning them faster, and you'll have all the terms, descriptions of a contract, types of orders, and a special chapter on trade psychology. Look for the book link below the video, and thank you. I open all my trades with an OCO order. It's one cancels the other. It's called a bracket order. Shorted one contract, 13.5 points, and you can see the stop is $7 up there. That's my max risk on the trade. And as I planned, I hope this trade will not be risky. If I lose $7 and get stopped out, that's the end of the trade. But that didn't happen. In fact, it started going down right away. So I get out my tasty trade mouse and I move that stop down. See what I did? The stop is now at 15,812.5 points. That's 1 point or $2 that I've locked in. Now, that's what I call a free trade. I know nothing's free, but now I can't lose a penny, not even 1 penny, out of my account. I'm going to fast forward here. We're 2 minutes into the trade now, and that's halfway. This trade's going to last about 4 minutes, and this trade is going great. No drawdown at all, and I'm trading down at 15,804 now. So I get my tasty trade mouse and pull that stop down. I'm going to lock in some of the profit here so that I won't give it back if the market turns against me in a hurry. Can't believe how fast the price just zipped down there right away. That's what I'd hoped would happen, but of course, you never know. And it's still going down. I'm down to 15,801 right now. And I just moved my stop again. My unrealized gain locked in now is $18.50. And I do not want to give that back. So worst case scenario now is I make $18.50. Now when the trade's done here, you can rewind and go look at my trade setup again and all the reasons I cited about why I felt the prices were going to go down at this particular time. Turns out I was right. Had I been wrong, I would have lost my $7. But my real point is, this is what I want you to get and understand and use it. You don't have to use a large stop order. Only use $7 if you pick the right trades. I would have lost $7. That's not a terrible thing. What's terrible is if you put in a stop and you move it and you give up your ground and you wind up losing a lot of money in one trade. It's so frustrating to have to try and make it up with another 3 or 4 little trades. Sometimes beginners will pick up little coined phrases like plan your trade and trade your plan, but I don't agree with that. Just because you have a $25 stop, if a trade isn't going your way, you can get out at break even or just lose $5 or $7 or $10 or whatever you want. It's your money and you make that decision, and you have to keep control of that with a mindset. This trade's timed out to about 3.5 minutes or so, and I'm about to get stopped out right here. And I made $31 on the trade. I put up around $300 margin, so that means I made about 10% in 3.5 minutes on the trade. Not shabby. What did I like most about the trade? The fact that I had no drawdown, none whatsoever. Learning to trade these Micro Emini successfully is not an easy thing to learn. A lot of people come, and rightly so, with their experiences and other kinds of trading, and they find that trading the Micro Eminis, this day trading thing, is something quite different than what they're used to. So I want to show you a couple of things, give you some food for thought, so you can re-examine the way you're thinking about this trading and maybe help you find better results. Sometimes all it takes to get an entirely different view of a thing is to look at it with a different perspective. This is August the 1st, 9:30 till 4 o'clock, open and close Eastern times. Now, let's zoom in a little bit and see if we can find our trade. There it is right there. 1:35 in the afternoon. So our whole trade, the beginning, the middle, and the end, all happen in only about 200 seconds out of an entire day trading. There are so many things that affect the stock equity index futures prices. Let me share the good news with you. You don't have to be right for a whole hour, a day, a week, a month, or a year, just for a few seconds. So find a trade signal indicator that works for you, practice it over and over again. Stay with it, don't hopscotch from one thing to another. And most beginners don't realize this, but all of the trade signal indicators, all 150, and there's really more than that, they're all made from exactly the same data feed that you see on your screen on the right now. A little mind-boggling, actually. You just have to learn how to be right for a few seconds every day to make some money. Your candlesticks and trade indicators are just tools. You just have to learn to use them just to be right for a few seconds every day. I hope that takes some of the pressure off. Another thing you're going to have to give up is the idea that when you have a losing trade or a break-even trade that you did something wrong. You did not. Hear me, because I'm saying this type of trading is just inherently risky. And even if you're great, you're only going to have successful trades about 60% of the time. I lose 40% of my trades. The odds are you will too. You'll have streaks of good and bad luck as you go along, but on the average, 60-40, that's it. If you've already been visiting the channel for a while, you know I'm a big fan of trade psychology. For sure, language informs the way that we think about things, so I'm going to throw a few things out there for you. Now, I'm going to talk a little bit about how we think about this 60-40 thing and the 50-50 thing. All things being equal right here, you see the neutral is that it's a coin toss. We can buy or we can sell, and there's no in between. Now, if you're a person that doesn't have a lot of patience, you're just going to have to fake it till you make it. But next time you trade, stay out of the neutral zone. When you see a downtrend, short something. When you see an uptrend, buy something. And that's the reason they say the trend is your friend. And in this kind of trading, you're going to need all the friends you can get. I need your help with something. If you'd like to see another video similar or like the one you saw today, click the like button. I tally those. It helps me determine the content for you here on the channel. So I'd appreciate the help, and thank you. Be sure and hit the subscribe button and that alarm bell too, and you'll get a notification each time we post new videos up here on the channel. And if you'd like to know more about the broker I use here on the channel, Tasty Trade, look for the broker link in the description below the video. I'm Don Singletary. I hope every day is a payday for you.